Today, I'm going to talk through Bitcoin and Ethereum. We'll go through some of the charts and from a price perspective. Then we'll move into some of the on-chain data. So some of you guys may be already aware of it, but if not, I'm going to pick a few interesting items that I like to follow, and maybe you guys might begin to use some of that in your trading. One thing to bear in mind is a lot of these on-chain metrics are very hard to trade on the short time frames. They're usually better to get an understanding on what kind of market we're in. Are we in a long-term uptrend? Are we in a bull market? Are we in a bear market? Are we transitioning between the one and the other? So that should give you an idea on what kind of setup should you have a preference for moving forward. Okay, so here we have the Bitcoin chart on the daily. So we can see a good level of support down here around just around a 30K level. It's bounced off that support quite a few times now, so I think 4 or 5 times now we've bounced off that, and we've just hit resistance around the 40K level. So when we zoom out, as you guys know, we've had this big run up to around the 60K mark. We've come down and we've found some support. One thing which I like to look at when looking at the Bitcoin price is also to look at the hash rate, which is in this bottom channel just at the bottom of the chart here. So this is an indicator from a chap called, I need to get his name, it's a guy called Michael. He works at a fund in the US. I'll share his details afterwards. His Twitter handle is a good chap to follow if you're interested in crypto markets. And the hash rate, as some of you may or may not be aware, it shows the total amount of computing power currently on the Bitcoin network. So as you guys know, on Bitcoin, there's lots of companies, large institutions that mine to validate the transactions, and the total the total computing power is measured by hash rate. So if you look here from early June, we've seen hash rate drop considerably. And I'll go into hash rate a bit later on in a separate chart. But what we tend to find is that hash rate lags price. So there is some correlation there, but generally it always follows after price. And generally when hash rate is increasing, we tend to be in a bullish regime. Welcome, Daniel. We tend to be in a bullish regime, and then when it starts to fall, what hash rate is telling us is that actually mining equipment is being turned off, right? So we obviously know the news recently with the China ban in mining. We've had lots of miners over in China trying to move abroad, shipping equipment over to the US and in Eastern Europe. That is obviously why we've seen a big fall in hash rate. But there are other reasons why hash rate may fall. For example, maybe prices have fallen considerably in 2018 when they fell 80% off their highs. Lots of mining equipment was turned off because they didn't see it profitable to mine anymore. You know, when the price is around $3,000, certain miners who have older equipment, it then works out that it's not very profitable for them to mine, so they'll turn off that equipment, and that usually you'll find in a bear market, either when prices are suppressed or you have regulatory issues like we've seen in China, where we've had a big migration. So there's not too much to report on the Bitcoin chart at the moment. As we can see, we're kind of range bound at the minute between 40 and 30K. What's good to see is some volume returning to the market, which we see here in these red channel bars. We've got some volume returning, which is good. There are also headwinds from a macro perspective to the wider crypto market. So what you tend to find is that cryptocurrency investment and going long crypto is generally a bet against traditional currencies. So when you start to see a large degree of money printing, like we see in the US with the Fed increasing money supply by 25% last year, that's when we start to see a run up in crypto prices as the alternative to that traditional financial system, which may be breaking. You know, when you're inflating money supply by that much, generally people think it's got to come to an end at some point. No one knows what that end will look like, but having a play in cryptocurrency is a good way to hedge that. So there is those headwinds because, as we know from Jerome Powell, we have the inflation picking up, and we've also heard him talk about the want to kind of reduce the stimulus in the US or to start tapering. If there's more tapering, of course, that's less money printing, and that should be a bit of a headwind into higher crypto prices. That hasn't happened yet. We haven't had the tapering. The jury's still out whether that will actually happen, you know, whether things will pick up in the US from an economic perspective. If things do pick up, then of course there's more of a reason to taper. If things don't, which lots of people do believe that in fact, you know, we're not going to see that pick up longer term on the US jobs market, for example, that would that will then lead to more tapering. You know, if there's no tapering, then of course that's bullish for crypto prices. So there are some more macro headwinds which are outside of the crypto sphere, which you have to be aware of. So we're just sitting at around this level. Hard to know where we're going to go for now, but I'm going to show you some indicators later on which might be interesting to follow. So let's move over to Ether. Again, it's a similar story over here. Hashrate is still following Bitcoin at the bottom. And again, we've hit resistance around 2,300 level. One thing to mention, guys, if you do have questions, make a note of them. And at the end, I want to do a little Q&A. So if you guys have any questions about crypto, the wider market, whatever it might be, we'll cover that at the end. So yes, Ethereum looking relatively similar over here. As you know, they're very highly correlated. But there are lots of interesting things going on in the Ethereum market, which some of you may be aware. Of course, we've got Ether 2.0. We've got the London upgrade, which is coming out next week. I think it's in around 4 or 5 days, EIP 1559. So we've got some additional fundamentals to look at on Ethereum, which we don't have in Bitcoin, which again, I'll cover a little bit later on. A chart I like to look at, especially if you're trading the majors, Bitcoin and Ethereum, welcome Vaz, is the Ether BTC chart. So as some of you may be aware, in my previous video on the crypto cycles, if you haven't seen it already, I recommend go and have a look. It should be in the course material or it'll be on YouTube, how we have these types of waves of momentum across different crypto assets. So it always usually starts with Bitcoin. Bitcoin usually gets the pump first. We see investors flows into Bitcoin. Then they start to take profits in Bitcoin and rotate into Ethereum. Then we start to see a lagged effect of Ethereum rallying shortly after Bitcoin. The time varies considerably depending on many factors actually. And then you start to see people taking profit in Ethereum and rotating into the smaller altcoins and then further down the market cap table. And that's generally how things work. So I like to watch Ethereum BTC because it gives me an idea on where we are in that cycle. So over here, we've got 2017 and 18, so the previous bull market. And when we see Ether BTC increase, so go up, that means Ethereum's value is increasing versus Bitcoin, right? So this is times like this, we tend to see a big rally in Ethereum. We don't see much of an impact on Bitcoin's price. Perhaps it's just sideways. And we've seen that more recently if you've been following the market over here. But generally, you begin to see Bitcoin rally. So at the beginning of the bull run in 2017, we see Ether BTC drop considerably. This is when BTC is rallying. Ethereum's not doing too much. And then we see Ethereum start to catch up a bit later on. So this began in June. Then Ethereum decided to catch up considerably December, towards the end of the cycle. And that's always what we tend to see. We've even seen the same thing more recently, right? So down here, I should move my camera, down here in Jan, we start to see the run up in Bitcoin. We see Ether BTC begin to drop down to 0.03. Then we see Bitcoin start to stabilize, and then Ethereum kicks in. We see the rally in Ethereum, Ether BTC chart starts to rise, and then we hit resistance. So this is just a good chart that I like to follow. And now again, we can see we're coming off again. So perhaps we're seeing more activity in Bitcoin. Bitcoin seems to be gaining more than Ethereum over time, over this time frame that we're looking, because Ether BTC is dropping. And this could tell us a number of things, right? So number one, it could just tell us that we're in a bear market. In a bear market, generally Ethereum and altcoins will move a greater amount than Bitcoin, so they're more volatile. So that means they'll drop more than Bitcoin in bear markets, but they'll also rally more than Bitcoin in bull markets. So this could be one thing, we're in a bear market, Ethereum's pulling off, or it could mean actually, which is more likely, perhaps we're a range bound / hopefully entering a new bull market or a new bull phase where we've seen a bit of a run up in Bitcoin recently, but we haven't seen Ethereum catch up yet. So perhaps we'll see some action on Ethereum side to bring this further higher, or on the alternative, we'll continue lower if actually that bull thesis doesn't play out. So this is an interesting chart to follow. If you guys don't follow it, I think it's worth having a look at. Another one I like to look at is Bitcoin dominance. So what this chart shows is the Bitcoin market cap versus all the other altcoins on the crypto markets. So at a value of 100, the only cryptocurrency in the market was Bitcoin. And as more altcoins start to enter the market, so in 2016, 2017, when the ICO boom started to happen, we then see the Bitcoin dominance fall, right? Because more altcoins make up a larger percentage of the total market cap or cryptocurrencies. Therefore, Bitcoin has less dominance. So this is also something which can be used with Ethereum BTC to kind of show you where we are in these types of cycles. So as we know, 2017 was a big bull market. We had lots of ICOs happening, prices were going through the roof. And this is why we see Bitcoin dominance come down. As I said before, altcoins tend to move at a greater percentage than Bitcoin in both directions, and they're lagged. They're lagged by a certain amount, so they always tend to rally after Bitcoin. So we see that all the way down to the highs of January 2018. Then on the pullbacks, we see the bear market, as we see all the altcoins tend to lose their market cap quicker than Bitcoin. So that means that Bitcoin dominance recovers, and we start to see Bitcoin dominance rise again over time up until August 19. So we've come all the way down. Bitcoin dominance is around these levels. This is after Ethereum and other altcoins have rallied over the past few months. And now we start to see an uptick in Bitcoin dominance, which is similar to what we're seeing on the ETH BTC chart. So again, this is another thing to use alongside ETH BTC to understand, which asset is currently leading the moves. Is it Bitcoin? Is it Ethereum /alts? So it'll be interesting to keep an eye on whether we continue to go back up to the resistance level in ETH BTC. If we see Bitcoin rally versus Ether, hopefully we'd see that come back up here. And then perhaps we'd like to see Ethereum rebound off this resistance level, and we see Bitcoin dominance reduce again. Cool. All right. So that was just a quick summary on both Bitcoin and Ethereum. I didn't want to go into too much detail there. I mean, it's all self-explanatory. You guys can all read charts now. But I thought we'll spend a bit more time on the Bitcoin and Ethereum fundamentals. So looking at the on-chain metrics. So I use a company called Quant. I don't know if any of you guys would have heard of them. There's a few of them out there. Glassnode is also a company that I've used previously, and they provide on-chain data. The good thing about them is that they process the on-chain data for you. So all of this data is freely available from the blockchain, from the Bitcoin blockchain, Ethereum blockchain. You can access it yourself, but obviously it's raw data. So it's very hard to process, to actually put on a time series and produce the data onto a graph and then analyze it. So these guys do all the hard work for us, which makes life easy. So a couple of interesting charts that I like to look at. This is the first one. So this is Bitcoin exchanges net flow. So what we're looking at here is the net flow into and out of exchanges of Bitcoin, right? So how much Bitcoin is entering exchanges on average. So this encompasses all the exchanges, or majority of exchanges are here, and how much is leaving, and it gives us the net value over time. So an interesting thing to note is the most recent value, right? If we look over here, this was yesterday, in fact, we've seen a large negative net flow. That's actually an outflow from exchanges of Bitcoin. So historically, that's a fairly bullish indicator. Now, with all these things, you don't want to look at any one indicator in isolation. What you want to do is get a combination of different indicators that can give you a bit of a better full picture on what's going on. But this alone, you can see, is the largest outflow we've had since, I mean, this chart's going back to September 2020, so before even the bull market really began. So that's a huge indicator for us that, people have people have bought a lot of Bitcoin on exchanges and they're taking it out to cold storage. That's generally what we infer from that. So that's an interesting indicator to keep an eye on. So this on itself, without looking at other stuff, is a fairly bullish indicator. Let's go on to the next one. And this is looking at the Bitcoin reserves on exchanges. So this chart covers quite a few exchanges. We've got Binance, Bitfinex, BitMEX, quite a few. There's quite a lot there. And this combines the data across all exchanges. And what we're looking at is what Bitcoin is held in reserves. How much is kept on exchanges, or how much is remaining on exchanges? Generally, if the value is going up, it means there's more cryptocurrency being deposited to exchanges and being held on exchanges. What we might infer from that is that perhaps people are waiting to sell it, waiting for an opportunity to sell it. So it's on exchange ready to be sold. And when we see the value fall, so the reserve value on exchanges is falling, what we infer from that is that perhaps people have bought and now they're taking it off exchanges for cold storage, right? And that, of course, is a bullish signal, right? You don't want to leave your tokens on exchanges most of the time. You want to put it away somewhere safe into cold storage for X period of time. So again, if you look at the most recent data, we've seen a sharp drop in the reserves held on exchanges. So as we can see, the last time we've had a good drop was at the beginning of this bull market. And we've had a few drops in between. But more recently, this is quite a considerable drop over the past 2 months. So it's something to keep an eye on. Again, this does look bullish on its own. You know, this doesn't mean that prices are going higher, but this is a bullish indicator. So we want to look a bit further. We'll keep an eye on charts to see actually if the price action is actually going to follow through with what we're seeing on the on-chain data. So this is a good one I like to look at. Bitcoin reserves on exchanges, and also the net inflow and outflow from exchanges. Okay, this is another chart, which is the miners' net flow. So what this does is it aggregates all the main miners across the world. It follows all their wallets. And then what it does is it analyzes the net outflows and inflows into the wallet and out of the wallet. Now, when we see assets or Bitcoin leave miners' wallets, of course, it could be for a number of different reasons that they're leaving. But the most obvious reason is that they're likely to sell them. Right? They're likely to transfer these to exchanges to obviously make some money to pay for their costs. So generally, when we see an outflow, it's a negative number. When we see an inflow, it's a positive number. So again, recently, we've seen an outflow from miners. So this actually on its own, it's only a small value relative to what we've seen historically, but it's notable. What this tells us is that miners are actually, they're taking the tokens out of their wallet, and potentially they could be going to exchanges to be sold. So that's something which is kind of conflicting with the story we've just heard about the overall exchanges, where we haven't looked at miners. Now we're looking at miners' wallets specifically. So this is what I mean about trying to build a big picture on how are things looking. If you pick 7, 8, 9, 10, whatever there are, 10 different on-chain metrics, and this is kind of what I do with one of my strategies. What you want to pick, you want to kind of get a gauge on which of those indicators, how many of those indicators do you need to look bullish for you to have that bullish thesis moving forward? And it varies depending on what indicators they are. But this is a good one to follow. It has quite a few miners in here. Ant Pool, you've probably heard of. F2 Pool was probably one of the largest around at the moment. They've caused a lot of sell-offs over the past 12 months. And it's interesting that when you look at any particular miner, they tend to change their habits, which is interesting because it looks like what these guys are doing is that they're now aware that people use these metrics to a certain degree. So they change their behavior to try to not spook the market. So like F2 Pool, they used to have huge sell-offs. They'd withdraw a massive amount from their wallets, and they dump it on exchanges, and we see the price action. Now what they tend to do is they kind of filter it out at steady points because they don't want to spook the market. But F2 Pool are quite a big mining business. It's good to look at all of them together because there's obviously various different mining pools around the world. This is another good metric that I recommend people keep your ear to the ground on. And you don't have to have access to crypto quant to get this data. I recommend Twitter as your main resource for crypto. I would say, yeah, crypto news, not crypto market analysis. I don't think it's the best place for that on crypto Twitter. But following people that analysts from crypto quant is a great idea. And there's a few of them on Twitter that often just share their charts, and they give great insight to this for free. You just have to follow them, which is good. Okay, and here we have the Bitcoin hash rate. So this is a fairly important metric. As I said before, what this is measuring is the total combined amount of computing power, which is used to secure the Bitcoin network or used to mine on the Bitcoin network. And we can see it steadily increasing over time for the past couple of years, in fact. And recently through the China ban, we've seen that big drop off. And there's lots of people thinking about, you know, can we return to a bear market with hash rates so low? And there's different opinions on this, as you'd expect. What some people believe is that actually we need the hash rate to return to all-time highs before a bull market can be confirmed. You know, I'm not too sure if that's true or not, because what hash rate adjusts automatically. So a lower hash rate just means there's less mining equipment confirming or validating transactions on the Bitcoin network. It doesn't have too much of an impact on anything else. The difficulty reduces on the mining equipment, but it still keeps validating blocks all the time. With a less hash rate, what that means is that the time between blocks being mined is slightly longer. So instead of 10 minutes, I think it rose to 15, 20 minutes. But you know, nothing negative happens to the network over time. So I'm not sure if that's true, but a lot of people do believe that we need the hash rate to return back to all-time highs before a continuation of the bull market is confirmed. So hash rate is a good thing to follow. And what I have here is MAs on hash rate, because hash rate is very, very noisy. So I've got a couple of, I've got a short-term and a long-term MA. And some people use as crosses in trading strategies as one of X number of indicators when they're trying to build a fundamentals-based investment strategy. Hash rate would definitely be one of them. So this is just something else to keep an eye on. And now over to Ethereum. So yeah, we have a very different dynamic in Ethereum now with Ethereum 2.0 coming to launch. Number of different things happening on the Ethereum blockchain. I won't cover everything. There's a huge amount, and some of it is, of course, very complex. But Ethereum 2.0 is basically a deposit address where people who are on Ethereum can deposit 32 Ethereum and get an interest rate on it while it's in that deposit contract. And the idea is that you won't be able to get your Ethereum back from that contract, so it's locked up until Ethereum 2.0 is released. And that's a big question mark. Nobody knows how long that is. Could be a year, 2, 3 years. No one really knows. And generally with these things, they tend to get delayed. So these people depositing their funds in this contract clearly don't have any worries about the future price of Ethereum. They're happy just to lock their Ethereum up for a time period which is unknown to them, knowing that in the future, when they release their Ethereum back out again, Ethereum's going to be in a much better situation, lower fees, higher transaction speeds, and not a decrease in supply, but a decrease in the inflation rate, which is, of course, a much better environment for Ethereum. So it will decrease the increase in supply. So it's a bit confusing, but I'll cover that in a moment. So what we're seeing here, and we've got the Ethereum price in orange, and then we've got the total value of Ethereum staked in the contracts over time. So at the moment, we've got 6.5 million Ethereum currently staked in the contract. And what's interesting to note is that, yes, as price has been increasing, we see the number of, or the amount of deposited in the contract increasing. But even after the huge sell-off where prices dropped 50%, and it still looks pretty pessimistic, people are still depositing more into that contract. You know, they have a lot of confidence in the future growth of Ethereum as a network, and obviously the price, otherwise they wouldn't lock up their Ethereum. That's a really interesting thing to see, that people in the Ethereum community, well, especially these guys that have deposited into the contract, have a huge amount of conviction in Ethereum as a network, as an asset. So this, you know, I'm quite a large Ethereum bull. I always have been over the past 2-3 years. I haven't deposited funds into the Ethereum 2.0 contract just because, as a trader, you want to have access to your assets, right? If something happens, I don't feel comfortable locking it up for an unknown period of time. So these guys that are happy to do that have huge conviction in it. So 6.5 million Ethereum are currently deposited. What's the price today? The price today is around 2,300. So that's around $15 billion is currently locked in Ethereum 2.0, which is, of course, a huge amount of money. And on this chart, what I've got here is actually the amount deposited relative to the total supply of Ethereum. So currently, today, 5.5% of the total supply of Ethereum is locked up in this contract. So what that means, as a trader, as an investor, we can see this chart is increasing over time. It means that supply has been taken out of the market, right? That's generally a bullish thing to see. And also what's interesting is the rate of change. So at the beginning of 2021, we're at just under 2%. And in 6, 7, 8 months, where we've doubled to 5%, which is obviously a big increase relative to the total supply of Ethereum. So again, this is quite a bullish thing to look at. 5% is huge. So this is one impact which a trader must be aware of, or a longer term investor, when looking at holding Ethereum long term. People have a high conviction in holding this in the contract. And it looks like that trend's increasing. It looks like over time we're going to see a higher percentage of the supply locked up. So this is one thing which is going to reduce the tradable supply. It will reduce the selling pressure over time. And it's an important consideration for Ethereum. This is the number of deposits in Ethereum 2.0 contract. So what we can see here is during the run up in price recently, there were of course some deposits, but not too many. But after the sell-off, we can see that actually the number of deposits has picked up, right? Which is odd to see. So even though people's USD value is halved, sometimes 60% versus all-time highs, they're still happy to deposit it into the contract, but again, it is quite bullish. So what's interesting with Ethereum is that we've got a number of changes going on, which will all ultimately reduce the supply on the market over time, which is great as an investor, as a holder, as a trader. If you're long, that's a great thing, right? There's less selling pressure. So this is obviously one of the biggest things. Ethereum 2.0, locking up your Ethereum. It's not available to trade, to sell. Then we also have some aspects of EIP 1559. So some of the upgrades coming out with Ether 2.0, which are being phased over time, are also going to reduce the supply or reduce the increase in supply over time. So as you probably know, Ethereum has an inflation rate. So an amount of new Ethereum is mined or produced every year. And lots of people have seen that as an issue because Bitcoin doesn't have the same dynamics. Bitcoin has a finite supply. Yes, we see supply increasing, but it's increasing at a slower rate, and it will increase up until a cap, 21 million Bitcoin. Ethereum doesn't have that. It has an unlimited supply and a higher inflation rate. So this is part of the reason why Ethereum 2.0 has come about. What they're trying to do is actually make it more attractive for holders, right? There will always be an increasing, there will never be a cap, sorry. So the total supply will always be increasing. But Ethereum 2.0 will be reducing the rate of that increase, so reducing the inflation rate. And EIP 1559, which is going to come out in a few days now, I think the 4th, 5th of August, what that's going to do is actually burn part of every transaction fee and take it out of supply. I think over time it's going to lead up to around 75% of the transaction fee is going to be burned. So what that does is that obviously takes it out of circulation. It takes it out of the miners' pockets, who ultimately might sell that. So this is obviously a bit negative for a miner. If you're an Ethereum miner, lots of them did actually oppose this EIP agreement, but it is obviously going through. So what we have is also a different dynamic on the supply side, where the rate of change is decreasing, as well as Ether 2.0, the contract reducing supply. So all these different aspects are having a bit of a supply squeeze on Ethereum as an asset. When you also include all the other aspects from how Ethereum is being used as a world computer, all the DeFi that's going on, all the applications that are running on it, for me, it's a very attractive asset. And I think it's a very different play compared to Bitcoin. So these are just some interesting aspects which we can look at, which are slightly different to Bitcoin. Let's see here. So on Crypto Quant, we've got a few charts that we can look at. We've covered some of the staking. Number of unique depositors. So this is also interesting to see. So the number of unique depositors has increased substantially at the beginning of this large run-up and has continued to increase. So people have a lot of conviction in it moving forward, which again just solidifies what we said earlier. Okay, what do we have here? BTC hash rate. So we talked about hash rate earlier on. This is actually what the hash rate looks like. So it's always good to apply some moving averages when you're looking at noisy data like that. I think I had a 5-day and a 10-day on there, which is always good to see. One other thing which I thought was worth sharing with you is how someone might kind of combine some of these indicators, on-chain indicators, into some kind of larger indicator that tells you what kind of market we're in, what kind of regime we're in. So here's a number of 3 that you could use. Active addresses is literally just the total number of active addresses on the network, right, which changes. Generally, when we're in a bull market, we see the total number of active addresses increase, right? We see all the retail traders join, they open up accounts on Coinbase, wherever it might be. That's new addresses that are being used to buy Bitcoin. Generally, they're active, so they're not just there, but they're buying, selling Bitcoin or transferring it across the network. And when we're in a sell-off, bear markets, you know, it doesn't get so many headlines, people aren't so active on the chain, we see active addresses fall. And active addresses is not quite a leading indicator for price, but it does match it quite well. So that's something good to use to see, you know, if we are returning to a bull market, if things are looking a bit bearish, based on whether active addresses is growing or declining. And it's a very similar story for total transactions. You know, these are good ways to measure activity on the blockchain, and generally a higher activity means a higher price, very generally, and vice versa on the downside. So generally, I'd like to apply moving averages on these. Again, it's noisy data. You could do a simple moving average crossover. That might give you a nice indicator there to use in combination with total transactions. But in addition, we've got the MVT golden cross. So this is something I use in one of my strategies. And what this is looking at is the network value, so the total value of the network, so total value of the Bitcoin network, the market cap, versus the value of the transactions going through the network. So network value versus transactions. And generally, what people do is they put up 2 little bars here to kind of almost like a Bollinger Band, but 2 levels under which one, under the bottom, you consider the market to be underpriced. So the number of transactions are quite high versus the price versus the market cap of Bitcoin. And then you've got the opposite, when it's overpriced, it's the other way around. So these are things which you can use, and you can get these from data providers such as Quant, or just follow the analysts, and they tend to post these charts with lots of comments on for free, and they're great to follow. So when you use it, a number of these, you can combine them together to give you an understanding on what kind of, you know, are things looking bullish or bearish. For example, if we saw a pickup over here in active addresses and a pickup in total transactions, and we saw, you know, MVT probably creep down below the line, perhaps that's a bullish indicator for us, right? Things are looking better, and then we want price to confirm that is in fact happening. The on-chain data looks positive, and let's wait to see if we see the same thing with price. That's it, guys. So it was only a relatively short one to cover a bit on crypto, a bit of on-chain data. But now, happy for you guys to ask any questions that you might have about any of the on-chain data we've discussed, or just the wider market, if you do have any. Anyone got any questions, crypto related or wider market related, if you wish? Okay, sorry, I should open up my, feel free to put it in a chat. Otherwise, I'll assume there's no questions. Okay, Izam, what are your thoughts on Binance and regulation? Yeah, that's a good question. So we know the regulators have been giving Binance a lot of pressure across the world. The UK regulator, the FCA, have been putting some pressure on them to get regulated. We've even seen their home base in the Cayman Islands. The Cayman Islands regulator has been applying pressure on them. And of course, we see it in the US. And recently, they've actually come out and said that they're happy to be regulated, and they want to be regulated in the jurisdictions which allow a crypto regulatory framework. And that's an interesting thing, right? Because there's not many jurisdictions currently that have a cryptocurrency framework, which is certainly needed. Cryptocurrency businesses are very different to traditional financial institutions, and therefore the regulatory regime should be changed to and adapt to that. We do see places like Gibraltar. I think the Cayman Islands do have a framework for crypto entities, and some of these smaller jurisdictions do, but we're not seeing that in the larger jurisdictions yet. So I think what they responded is fair. I think, you know, they said we're happy to be regulated in places where we can be regulated. Ultimately, that's what they're saying. But the question is, what will they do to do that? We know recently they've changed some of the rules on Binance. So for their futures markets, if you're a new futures trader, before they had leverage up to 125x, and they've suddenly reduced that down to, I think it's 20x. Yeah, exactly, 20x, just like FTX, which is a big change, right? It's a big drop, which is fair. I mean, I don't really understand who is trading with 125 times leverage. I don't even know how you trade with that type of leverage, you know, unless you're just gambling, you're taking a pure punt and you don't want any downside risk before you get wiped out. Even 50 times leverage is crazy. I mean, yeah, exactly. People are just getting wiped out. So I don't know how people are trading like that. So I think it is a good thing, because all that's doing is incentivizing gambling. And the regulators obviously want to see that the retail trader is protected, that they're not taken advantage of. So these little changes that they're doing, I think is good. I think they'll need to make a number of these changes about how they operate before they can get that that regulation. So that seems to be what they're doing at the moment. Which is good. I mean, one of my main, well, all of my main strategies are on Binance, Binance futures. And the reason why I use Binance is because of the number of assets I can trade on a futures perspective. They offer 150, and the strategy I trades 120. So there's not many other exchanges where I can have that. So it would be, you know, I'm very pro Binance, but I do agree it'd be great if they could get regulated so that we don't have issues with deposits and withdrawals from these places, which of course has been another issue with banks closing accounts for people that have deposits from Binance. We see that where Barclays was doing that recently, that they've stopped you depositing money into Binance. They're saying to protect you as a retail trader, which is obviously rubbish, but it just makes life harder for someone who's trying to use their platform. So I'm all for regulation of the crypto exchanges, but I agree regulation needs to adapt. You know, it's in 2021, things have changed, financial markets have evolved, but regulations haven't. So I think they'll need to catch up. So that is interesting. Any other questions? No problem, Isam. Good to hear that you've got your ear to the ground on what's going on. Lots to follow. So it's hard to keep up with everything, especially in the DeFi space and NFTs. I mean, it's just a lot going on, but this is all positive. You know, this is a market which is growing at an exponential rate in multiple directions, which is great to see. Any final questions then from anyone? Michael, thoughts on daily RSI breaking multi-month downtrend? Is that on Bitcoin you're talking about? Okay, so I mean, yeah, it depends what you look at, right? So you've got this downtrend here, and it's broken out in isolation as a single indicator. That's could be seen bullish, but as I said, with all of these things, what I like to do is get a combination of indicators to support something. But on its own, yes, that seems fairly bullish, and we're seeing that, right? Because, you know, look at the volumes we saw at the highs. This is on Binance, so it has one of the highest volumes in the industry. So I tend to look at Binance. At the highs, that the volumes are relatively low, and we can see that volumes are picking up. So people are really buying into that support, maintaining that level, and you know, you generally see RSI pick up due to that. So yeah, I mean, it's a good thing to spot, Michael. So that's perhaps something, you know, if you were trading on a higher time frame, or even a smaller time frame, it's just good to be aware that, you know, RSI potentially returning to positive territory or a positive environment. But again, we'd be looking for some confirmation on the price and whatever indicator you might be using as well. That may be on-chain data or whatever it might be to confirm that. But things are looking better than they did a few weeks ago. It's still very early to say. You know, we are bouncing off the resistance level. So we have to see how things play out. There's lots of things at play, which is why I always struggle with people that tend to say BTC is going to be X in the future or Y. And how can you possibly see into the future to understand what regulations may come out, what issues Binance may have, what other news may come out? It just seems ridiculous to put a number on that. So I've never done that. I just say, you know, you just trade what you see. That's ultimately what you do. And at the moment, there's nothing telling us either way, really. It's good to see volume pick up. And you're right, it is range bound, but we're back at resistance level. And I'll be watching that closely to see what happens moving forward. My strategy is generally, it is a trend following strategy. It trades, as I said, a large number of assets, and a number of them have started to turn long, which generally hopefully is a good thing. You know, if things turn negative, then it won't be so good. They'll end up hitting stops, but things are starting to turn around. So watching a 40K level is going to be important for most of us in BTC. Thank you, Michael. Tibal, you talked about the following interesting Twitter accounts. Yes, which share crypto chart analysis. Do you recommend any to follow in particular? Good point. Let me find some. See if I can pick them out. So Crypto Quant is the platform that I use. So it's worthwhile just following CryptoQuant.com. They have their own Twitter account, and they are, of course, always posting charts on there themselves, which usually have come from their analysts. So that's something to look at. I can't actually find the names of them. I don't know them by name, unfortunately. But if you follow Crypto Quant, they will they tend to reshare some of the analysts' work. And I think if you follow Crypto Quant as a story or topic, they will come up as well. That person I was asked said that you should follow. Let me see if I can find him. No, I can't. I'm terrible with names, so I'm completely useless, unfortunately. But if I think of them, I'm going to post them into the main group so that you guys can have them. Twitter's the main thing I use in trading. I don't use it for market analysis or listening to the rubbish that goes on there, but for things like, of course, following things like Elon Musk is also obviously important. A little analysis from reputable sources, I think is good. I don't use much else on the crypto specific side of things. Yan, okay, MA2 is crossing MA50, which is a bullish sign. Yeah, again, in isolation it can be. You want to combine a number of indicators together to get an idea on how things are going, but on itself, certainly, yeah, it would be. Adam, you're sharing your TradingView window, but you might be browsing Twitter in a different way. Yeah, no, that's fine. Unfortunately, there's nothing interesting to show you. I can't think of people's names, but if you follow this account, Crypto Quant, that's definitely going to be worthwhile. And actually, if you have Telegram, this is a good Telegram channel, Crypto Quant Official. I think they might share slightly more things than they post on Twitter, but that's a good place to start for sure. Okay. Yes, he is a CEO, Michael. That's true. No problem, Tibald. What is the volume indicators you are using? So this is actually my own one that I built, but it's built based on volume spread analysis. So there's a video you can find. It should be in your trading materials. If it's not, this one will be on YouTube. It is volume spread analysis. I think there's 2 videos on it. And in the first video, I talk about this indicator. It's called volume spread for VSA, or the original is called volume spread for VSA, but it's very similar to this. What I'm doing here is I'm actually looking at volume versus the spread of the candle, and it's giving me different colors based on what's happening, which is a very easy way to see it. But the volume the volume spread analysis indicator itself will change color based on how high the volume is. So generally, you will have this cloud. This is the same for volume spread for VSA. We have this cloud here where volume is in that cloud. It's generally relatively high volume. It's all about having relative volume versus previous volume. So ultimately, it's just a volume channel, but we have a cloud here to help us identify relative volume. Adam, news on Amazon was the driver for the recent bounce on BTC. Yeah, I saw that, and there's a chap I follow on Twitter, Crypto Cobain, who, I mean, I don't recommend you follow him because he talks rubbish, but apparently he was one of the people that spoke to one of the reporters and just made it all up. This is what I've heard. I don't know if that's true or not, but there's a number of sources saying that. So yeah, it was obviously a load of rubbish. So that is not true. They came out shortly after and said that we're not looking to to launch our own cryptocurrency, which is kind of obvious. They're not going to do an ICO or something anytime soon. Perhaps they will in the future, but that was all sparked about by the fact that they had a new job post out for a cryptocurrency and blockchain something. Exactly, that's right, Azim. So they had this job post out, which kind of sparked that, and then someone else ran with it and blew it out of proportion. But I think it's only a matter of time before these large institutions getting involved somehow. I don't know if that's going to be the same as Tesla, and putting it on their balance sheet and MicroStrategy, but who knows? Perhaps they'll have some other way they can play this. I mean, having it as a payment method would be, of course, fantastic. I actually thought Amazon a few years ago had Bitcoin and cryptocurrency in their as a way that you can make payment. I think in 2016 or 17. I could be wrong, and then they removed it shortly after because they were told that only criminals and money launderers use it. So yeah, I don't know. It'd be great if they could use it, but that news probably was the spark in the move higher. But obviously it was fake, so that's not really good for our market, is it? When this fake news is made and it comes out as rubbish. But actually, the market's continued higher. So Amazon have publicly come out and said that that's not the case, but it's continued higher, which is good to see. So we just watch price. That's what we do. Yes, even got the job description. Thank you, Isaac. Blockchain, cryptocurrency, digital currency, and blockchain product lead. Yes, no mention of run an ICO in there. Cool. All right. Any other questions? I think we're about ready to wrap up. No. All right, guys. Well, listen, it's been a pleasure to speak with you. I have saved this, so I'll post it into the channel. And I look forward to catching up with some of you soon. Thanks for your attention, guys, and we'll speak soon. Bye-bye. You too, Piers, and the rest of you. Thanks, guys.